Within just a few weeks' time, China, the world's second largest economy, has managed to remove most, if not all, of its COVID-19 measures, and they have shifted the country's rhetoric towards the disease. So, what's happening on the ground there, and what does it mean for the Chinese economy? We're going to get to all of that on part one of this two-part special episode, a conversation well worth your 10 minutes, right here on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm your host, Anthony Pastore. I'm here with my colleagues from the Chief Investment Office, Jing-Chen Yu and Nadia Lovell, and we're going to be talking about China today. So let's get right into it. First of all, welcome to both of you. Good to have you here. And Jing-Chen, I thought I would start with you. We know now that at this point that China has reopened the economy. The COVID restrictions have all come down. So what's happening on the ground there right now?
Definitely, right. It's great to be here, right? So maybe before we touch on what's happening exactly right now, let's not forget about the fact that only less than 2 months ago, the main vibe in China was still pretty COVID-19 related. So things like PCR testing, quarantine, health code, etc. So they were, the main task of people's daily lives. And as a result, with the surge in cases, economic activities back then were at pretty depressed level, driven by those, draconian lockdown measures, etc., mobility restrictions. But look at right now, within just, a couple of weeks of time, the world's second largest economy was able to, manage to remove most, if not all of its COVID-19 prevention measures, and more importantly, has also shifted its sort of strategy towards this, disease to a more benign, direction. So as a result, now for the first time in 3 years, people are able to, travel both domestically and also internationally.
Yeah, now we're going to get into the travel section of that because it's also fascinating to see how tourism is spiking right after the lockdowns were lifted for the most part, as you said. But here's the question I think that a lot of people are asking. I wouldn't find it unusual if, say, infection rates continue to rise. Could China then shut down again and tell everybody to go back into lockdown like they did the first time?
Yeah, that's a fair question, Anthony, right? So actually, they sort of shifted its strategy, started to shift its strategy in the middle of this surge in cases. So that's one. And second, we already had a pretty, sizable infection rate. So pretty much 80 to 90% people have already got the disease. So there's really no rationale behind to really reimpose lockdowns.
Since the numbers are already so high as it is.
Exactly.
Right,
yeah.
and we were talking about this earlier. Scientifically speaking, herd immunity is around 70% of any population having the same disease, and at 80 to 90%, they've reached herd immunity there. So, yeah, not surprising that they would probably not go back into restrictions again. So, what does it actually mean then for the Chinese economy, these implications of it reopening? Because as you said, we were at very depressed levels economically for the last 3 years, and all of a sudden the floodgates opened, and everybody went out again and started spending and traveling. So what does it mean for the economy?
So let me just share a personal note, right? So I was on the phone with my parents last weekend. They were actually very busy with, doing their revenge traveling.
Is that what they called it?
Exactly, yeah. And not only just happened to them, right? So what they shared was that everyone, around them was doing their revenge traveling. I mean, once they got over this, disease, once they recover, there was more gatherings in restaurants. There's more lines piling up in movie theaters, et cetera, et cetera. So activities are coming back up. So looking at it right now, in terms of the real economy side, right? So we think it's going to be a more consumption driven. So from a top-down perspective, we're looking at around 6 to 7% of consumption growth versus flat to even negative growth of this year, 2022. Mm-hmm. And as in absence of a surge in cases or new infections, production activity should also pick up as well, particularly after the Chinese New Year holidays. So as a result, even with a weaker external demand, as a result of a weakening growth, particularly in the developed markets, we think CIO think we're still able to get the GDP growth in China in 2023 to around 5% with some upside risk from only 3% in 2022.
And does that outpace the rest of the emerging market countries that are part of that index?
Yes,
Yeah.
absolutely. Yeah.
Not surprising considering how it's just gone from lockdown to opening the doors. And it's interesting because I just saw statistics that 96 million people or so traveled for this recent Chinese Lunar New Year versus around 74 million people last year. So clearly there was a huge uptick in travel for the big, and it's a week-long holiday in China. So Nadia, it's interesting because I know we're going to talk a little bit more about the implications to U.S. and Europe growth as well, because as we know, China, being the second largest economy in the world, has major implications for what's happening on the ground in U.S. and Europe. So what are the implications to growth in those areas because of what's happening in China right now?
I think it's multiple folds. Not only we touch upon a bit of a travel and a resumption of international travel. We're seeing a rebound in that, but we're still well below pre-pandemic levels. We do expect that to start to increase in coming periods even more. And when we think about it, travel is not only going to be in Southeast Asia, but also into Europe and other regions like the U.S. I mean, reality is, when you think about it, over the last 3 years, China has sort of been in this rolling lockdown. And during that period, what has happened is that the consumer has amassed a fair amount of savings. So a lot of excess savings, some $4 trillion in excess savings that is just waiting there, ready to be unleashed, not only in China, but on the global economy. It's sort of this reawakening, Anthony, if you will, of the Chinese consumer that has caused us to recently upgrade emerging market equities as well as consumer discretionary sector in Europe to most preferred.
Right.
So there's a lot of implications here.
Right. The economic recovery, the signs of stability in housing. You've got domestic policy support increasing. So there's a lot of really good reasons why you've upgraded China equities to most preferred. And back to what you were saying, Jing Chen, about your parents doing revenge travel, I can imagine that you'll see a huge uptick. I was in Italy last summer in June of 2022, and I was in Rome and Florence, and it was fairly quiet. I thought it was going to be much busier, and I spoke to the locals there, and they said the reason why it was much quieter is because many of the tourists that come from Asia, particularly China, every summer to Europe were not coming because of the lockdowns. And I realized, wow, that must be a great reason why. I can get into any restaurant, I can go to all of the events and the landmarks, go to the Coliseum without waiting in line for 3 hours. But they said if lockdowns do come down, which they were anticipating would happen this year, the Europeans, they said we'll see a huge uptick in tourism, and that was just in Italy. So I imagine the rest of the continent will also be experiencing that as well this year.
If you go this year, Anthony, you'll probably be waiting in some long lines if our expectations are right.
So I'm glad I went in 2022.
Yes.
Anything else when it comes to the U.S. and Europe as far as economic growth, Nadia?
Absolutely. Of course, as we know, China is the second largest economy in the world. So China reopening obviously has implications for global growth. And we do expect global growth to get a boost from China reopening. In fact, in late January, the IMF actually upgraded its expectations for 2023 global growth as a result of China opening faster and earlier than anyone has expected. And so we think that that is going to be very clear that we're going to get a boost to global growth. I think some of the debate that's happening right now is what does it mean for global inflation? We know inflation, we've been feeling the pinch of inflation here in the US and globally all year, and central banks have been fighting that all this past year with increasing interest rates, trying to bring down that inflation. We know that China accounts for about 50% or so of global commodities. And so we're likely to see some upward pressure on commodity prices as China reopens. It's actually one of the pillars as to why we recently re-upgraded broader commodities. So we also think that Brent oil price is going to get back above $100, well above $100 as China reopens. And so all of this should be a positive from a commodity standpoint. But at the same time, even that you might see global food prices increase and global energy prices increase, there's going to be some offset, right? Because China going through like lockdowns over the last few years has also caused some supply chain bottlenecks.
Right.
We
course.
know that was a
We've
source
experienced
of
that here
absolutely,
for months and months.
shortages in autos and goods and so forth. And so as China reopens, we expect to see further improvement in those bottlenecks. And so that's going to be disinflationary. So there's some offset here, but nonetheless, we think broadly we don't expect to see a huge resurgence in global inflation as China reopens. But again, it's something that's bear watching, just given how hyper-focused central banks are on inflation.
Right, and of course we had the U.S. Federal Reserve recently increase rates again by another 25 basis points, and it doesn't seem like they're going to be stopping that anytime soon. So that's something certainly to be keeping an eye on, as you said, Nadia. Great. So I want you to come back. We're going to do part 2 of this. We couldn't fit it all into one show, so we're going to do a part 2 where we are going to focus more specifically on the investment ideas and investment case here behind the China reopening story. So thanks for being here, and we'll see you again for part 2. Great. And for all of you watching, make sure to come back for the second part of this China reopening. It's a fantastic story. And Nadia and Xingchen will be back to discuss all of the investment opportunities that are out there for you based on this story. So for more information on what we talked about today and what we're going to be talking about in part 2, visit our website at ubs.com/views. Plus, you can follow us on various social media platforms and check out all of our past UBS training episodes on demand. And if you have any questions about anything we spoke about today, make sure to contact your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon, everybody.